Welcome to the Real Estate Roadmap. Today's episode, we are starting right at the beginning with figuring out financial readiness, pre-approvals, etc. For this episode, we have our expert on board. We have our mortgage broker, Amanda. And tell us just a little bit about yourself and your experiences.
Absolutely. So I'll do Cole's notes or else I'll talk a lot. So a little bit about myself. I am Amanda Rose Dubroy. I am a mortgage associate with Donnelly Mortgages. He is our head broker. So that's that. I've been in the finance world for just under 4 years. Started in corporate banking, as most of us do. Realized that not all of your clients fit in a box, and I myself do not fit in a box. So I went outside the box, and that's how I entered the broker world. I come with a fashion business background. Yeah, it's interesting, right? And then I also have been an entrepreneur for like 13 years. So once I had tiny humans, I decided that I wanted to stay home with them. So I started sewing, and then I bought a children's consignment store. So that kind of is like, yeah.
Bring your fashion to your
It
back
brings
in there.
it all into one. Yeah. And then we bought our first home when I was 19. I've only ever used, thank you, yeah. We've only ever used a mortgage broker. So it kind of just seemed like where I needed to be. Yeah. So that's my little spiel.
Yeah. Perfect. Very cool background. And then you're also licensed in multiple provinces, correct?
So what happens is I'm licensed in New Brunswick, but our brokerage, Premier Brokerage, allows us the ability to do all of the provinces the brokerage itself is licensed in.
Perfect.
Yeah.
Nice.
So that's kind of fun. We can do Nova Scotia, PEI, and Ontario.
Awesome.
Yeah.
Very cool. So
down to the fun stuff.
right into the fun stuff. So we're really just trying to get an overview of the process, knowing that some people might just be a little bit hesitant to reach out. I myself am a full introvert and would love to have this information accessible before reaching out and having to ask questions that may or may not make me feel really silly for having to ask. So we're hoping to answer some of those questions.
It's not that it's silly. It's just that finances are terrifying, right?
That too. Yes, that's true.
Finances can be terrifying.
Yes, it's a very daunting thing. So I'm so happy you are here to help us answer some questions. So, right off the get-go, for just kind of financial readiness, are we even ready to call you? Are there some like key indicators that our viewers might be able to check in with?
Anytime, honestly. So I love taking the first-time homebuyer because they're the ones who know nothing, and they're also terrified because they know nothing, right? So if we start right at the front end of, even if it's a year out, where you're like, we'd love to buy in the next year, what does that look like? I can help you walk through that because sometimes it can be a long walk depending on where you are financially. We'll get into that more with credit scores and all that fun stuff. But I would say there is no time is a bad time, like anytime. Anytime, if you don't think you're 6 months, a year, or even 2 years, because I would love to walk you through and hold your hand while we get to those next milestones to get to we bought a house.
Yeah.
Right?
It's a cool one. And then, so you said you yourself have only used a mortgage broker. What would be kind of people looking at banks versus the mortgage broker? What's the difference?
So number one is relationships. We're your best friend. And it truly, we are in the business of relationships, where with a bank, you, just because I came from that world, when you go to a bank, that person who helps you get your mortgage is not going to be the person that's going to be there 6, 7, maybe a year, 5 years from now when they help you, because in the corporate world, they're always kind of moving pawns, where in the broker world, we get to build a relationship with you. So we get to help you buy your first home. And then we get to, if you're going to have kids or if you're going to have grandkids, or if you need a second home, we get to walk you through and get to know you as a person. You're not just a number. And I think that's what I love the most about it, is the connections that we make during the transaction that happen. That's what's it for me, really.
Yeah. Nice. So my experience actually when I bought my first house, so I bank with Scotiabank. So again, I was pretty clueless. Didn't have a YouTube video to follow along, so I just reached out to Scotiabank and actually ended up being rejected by Scotiabank initially.
Oh, no.
I know, so sad. Then
though.
I actually reached out to a mortgage broker, definitely within the same year, who got me a mortgage with Scotiabank. So, yeah.
Funny enough,
Yeah,
eh?
so it's just kind of a weird thing where I was like, I feel like mortgage brokers can do a little bit something different on like the underwriting or something to make us appear more presentable. Yeah, exactly. So yeah, I'm just from that experience, I would definitely be reaching out to a mortgage broker over just throwing my information into a bank again, just making sure they kind of work for me.
Kind of hope that they can make your numbers work for what needs to happen. So with going with a mortgage broker, we have the ability to underwrite your file up front, right? So then if we know we need to make some tweaks, or if, say, we know Scotiabank declined you, well, we can figure out why, but then also find a better product for you that you are going to get approved for. I think that's hilarious that you got approved.
It was really ironic. And he's like, okay, so this one's actually the one offering the best rate. And I was like, Scotiabank, really? Like, come on. So yeah, it was very funny. And then I guess we're going to jump right into what is this pre-approval?
What is this magical pre-approval? Yeah. Yes. So a pre-approval is when you are told how much you can afford to buy. So in the magical world of mortgages, we have what's called a total debt servicing ratio. So what we do is you provide us with all of your income documents, your letter of employment, T4s, all that fun stuff. And we put together an application, and it's going to let us know your ratios. So your total debt servicing ratios have to be below 44%. Now, just because example, you could afford on paper a $350,000 house. Doesn't always mean that's what you want to buy too, right? Because if we're maxing out your debt ratios, that doesn't leave room for, oh shoot, our car broke down, or oh look, we're going to start a family and that's going to cost us way more money every month. We need a new car. We need all of this, right? Where we're able to kind of underwrite the file and figure out, here's what you can afford on paper, but in real life, here's probably where you should be. And then sometimes it's about finding a happy medium with the client on what their expectation is of what they want to be able to afford. And down payment always plays a difference too, right? So the more the down payment, the more you can afford, or the lower your mortgage payment would be.
Right. Especially. And then for me on the real estate end, this is like our first question, especially in the quick hot market, is have you been pre-approved? Because
that's right.
Oftentimes they've just done kind of the look on paper, I should be able to afford this much. And if they come to us and tell us that number and they fall in love with a $350,000 house and they can actually only afford
305.
Right. It's very devastating for them. And it really helps us just kind of gauge what we're looking at before we have the daunting moment of
which is why they're so important, right?
They're
because
so important.
In such a high stress situation, it can really set a client up to fail if they don't have a pre-approval, because they need to know what they can afford realistically, not what they want.
Yeah. And especially now, like it's a very quick market. So we're finding like most offers like even go with the pre-approval letter just to make sure. And then you have like 10 business days to get everything put together, get the deposit. And
I love that you said 10 business days.
10 business
Thank
days.
you.
Yeah.
Thank you. Yes. I will note that it can be done shorter when you have a pre-approval, but sometimes there's hiccups that happen, and we do love that 10 business day.
Yes.
Thank you.
Yeah, I try and not put people in that situation. And it still looks okay on paper. They're not like, oh, they're really pushing it out. Like,
no. But the worst thing is when you get to that, if it's only a 7-day and you have to ask for an extension and there's multiple offers, I know it can become very difficult to kind of like have to persuade someone to give you the extra 3-day grace. So I do appreciate that we talked about that.
Yeah, of course. And then, so if we get our pre-approval, how long?
So pre-approvals are good for 120 days. So what happens is after we collect all the documents from you, we underwrite your file and get it ready to submit for a pre-approval. Some lenders have different sorry, my mind went totally blank there. Some lenders have different stipulations. So some of them will add a little bit to the interest rate, or some of them will lock it in at the rate that they're offering. But their pre-approvals are good for 120 days. And then just because we've pre-approved you at a 4.59 doesn't mean that's what it's going to be when we submit your commitment. So when we submit your pre-approval, you've got that for 120 days, that's locked in. But if you get an offer in 60 days and the interest rate's lower, we'll always get you the lowest rate. It's not exactly what's on. The only case we would use what is on your pre-approval if rates were to go up again, which hopefully they're not going to do that.
The best of both worlds. I was actually going to ask that, like, especially as we're seeing rates starting to fall, fortunately. I was going to ask, like, do we need a new letter? So you just automatically kind of look at stuff and make sure it's the best rate available.
Absolutely. Yeah. So example, clients that I've been working with them for like 6 months, and their pre-approval rate was like a 4.89. We were able to lock them in at a 4.44. So it's not that case. It's just,
could go down, but won't go up.
Won't go up over your pre-approval rate, but could go down. Yes.
Perfect. Wonderful. And then to get this pre-approval, what kind of documents should I have ready for you?
Yes. Well, here's the giant list. Yes. So we always need 2 pieces of ID. Yep. So we're regulated heavily. And one of those rules is we have to have 2 pieces of ID. Yep. We have to have 2 years worth of financial statements. So that's 2 years worth of T4s. If you've switched jobs, that's still okay. What we can do as an underwriter and a broker is we have the ability to create a story for our clients, right? So depending what happens. So we need 2 years worth of T4s. We need your last 2 pay stubs. We need a letter of employment, and we need your notice of assessment. If you owe CRA any money, they don't like that. So you have to have your taxes up to date. Okay. The only way we can get away with that is if you were a client that needed to go to what we call a B lender. So that's some type of alternative lending where if your credit score is bruised or you owe things in collections and that sort of thing, that's a different conversation. But for the pre-approval, it's pretty standard, just 2 years worth of history, and then we can kind of go from there.
Perfect. And then self-employed people like myself.
Yes, so the self-employed
don't have
people
access to probably half of what you just listed. So how does it differ? Is that just waived and you just do most of it?
So what we do is we would go like a stated income type of route. So they do always want like a 2-year average. Okay. So for yourself, because you're super new in real estate, I would recommend that you don't house shop for a little while, unless your significant other or partner can carry the weight of the employment that way, because for self-employed, it does have to be a 2-year average. Okay. I know, because for myself, I wasn't able to switch lenders yet because I wasn't 2 years into brokering. Yeah, that does get a little bit tougher just because you are self-employed. But there is a little bit of ways around that, depending. But because you're only like a month strictly, we couldn't work around it just yet.
Specifically going for me, I've actually been self-employed for like 15 years, and then I have like one glitch of I did a year corporate salaried, but it would have to be, we'd have to use a 2-year average. Right. They always want a 2-year average for self-employed. And then if it's like running your own business type of thing, there's different ways where we can get like 6 months worth of bank statements to show them that way if we wanted to go that way. Okay. Yeah, definitely a different topic, but one we can talk about. Yeah, perfect. And then I know it's already been kind of mentioned. Yeah. Credit scores. How important? What are you looking for?
They're so important. So for any standard lender that is an A lender, so all of your banks and your monoline lenders such as Manulife, First National, they're looking for a 650 credit score or higher. If you're a smidge below 650, we kind of get into the area where we would have to ask for an exception. But for the most part, under 650, that's where we would have the conversation of, okay, let me help you build your credit score. And it can be as simple as if you're in the low 600s, in 3 months, we can get you to a 650. It just takes a little bit of work. So the higher your credit score, the lower of an interest rate we can kind of negotiate as well.
Okay. Perfect. Yeah. And then how would that work with like a couple, say is it similar to like I'm newly self-employed, so Brandon would have to like kind of pump me up? Is it similar with credit score?
It would be similar with credit scores. Okay. Yeah. So if there's so many things that affect a credit score. So if it is just a matter of they haven't had time to build their credit, that's a different story than if they have things in collections and we know that they really need to actively work on their credit. But if it's just a standard couple, one has a 750 and one has a 633, the 750 would carry the 633 as long as there's like no collections or really big blips on the radar that would make anyone kind of question why the credit score is so low.
Right.
Because keep in mind, they go back 7 years, right? So if I've submitted a file and in 2021 you had a couple of missed payments, they're going to ask me about that.
Okay.
Yeah. Yeah. And you wouldn't think they'd go back that far, but they go back 7 years. So
Okay.
credit score is important.
Yes. But that's good to know that even if you are kind of lower, that it's a great time still to reach out and kind of
absolutely.
utilize you, because I shouldn't say it on camera, but
I would say
Brandon didn't pay too much attention. He ended up having quite a low credit score, and then just kind of like use ChatGPT and Google and stuff like that to try and figure out, like, he's doing wonderfully now, but just to know, like, you could have reached out and got on kind of a personalized plan
I would
to
say
make sure something he didn't then still hurt him in the long run.
In the long run, because lots of people will think, oh, well, if I go get this loan, it'll help me. And it's like, no, because then it bumps your ratios out of line, right? I would say that 10% of my clients are the ones where we're like hand holding for the next year. I'm checking in with them every month, being like, hey, what's your credit score? Hey, are we still doing this? So we're creating a long-term plan.
That accountability is huge for
I know,
people.
right?
So that's awesome that you're doing that. I'm sure they love and hate you for it.
And it's totally, some clients are like that. They're like, man, I really love that you're doing this, but it's the accountability of like, ooh, I didn't do what I was supposed to do. And look, my score didn't move. So there is that. I think that for us younger generations, school didn't teach us what we needed to know. Right. So we didn't learn about a credit score or taxes or interest rates or how much interest you pay on things.
Yes. I feel like that's the big difference where I came in. I have like a ridiculously good credit score. Yeah. But my parents are like accountants. So we sat down and had these conversations regularly. So I always felt quite savvy financially, where Brandon has, like, we're working on it now, but he was definitely like I don't need to pay off a credit card. We're like, yeah, you do. You really do.
And that's the norm. They're like, what? So credit cards, 30% is the rule. Like, maximum utilization is 30%, because once you start using over 30%, that's when your credit score drops. So lots of people don't realize that, because they're like, oh, well, I'm doing really good, but my credit card's maxed out. And I'm like, unfortunately, step one is going to be to pay that down.
Yes. And even just when you think about how much interest they're paying on that, that's so ouchy.
I know. 19.99 up to 21, right? It depends. And then if you take a cash advance, it's even more. Yeah. What they don't tell you is when you are paying off a credit card, your payment is going to the oldest purchase. It doesn't work from the front down. It works from the back up, right? So if 3 months ago you took a cash advance, but you've had a maxed out credit card for a year, like you're still getting charged all of those extra interests because you're paying from the back up. Yeah.
It's kind of like housing, and you're paying off your interest before the principal. So you're just like, I still have a $300,000 mortgage that I've been paying for your house.
But in year 3, that's going to flip, and you're going to be more principal than interest.
But it's good for people to know, because sometimes I'm just looking at documents and I'm like, huh? Yeah. Dad, accountant, help.
Explain this to me right here.
Yes. Yeah. And it's, again, just so helpful when you have someone who knows what they're doing to reach out to. So that's awesome.
It's like a team. I'm a teammate, right? I'm one of your teammates who's going to help you get you to that finish line.
Yeah, that's perfect. That's so much nicer than just, here's my T4's help bank. No. Oh, okay.
Why do you need these?
Yeah. So no, that's so awesome. How long does the pre-approval process take?
Yeah, so from getting the documents to submitting to a lender to getting a response back can be anywhere from like 5 to 10 business days. I know sometimes it can take clients a couple days to get things together, but usually within 10 business days or less, we can get that pre-approval back, and then you're good for 120 days. So we can just keep on trucking. We can create a plan. If you come back declined, generally they give a short explanation as to why. So then at least we know what points to focus on to create the plan for moving forward.
Nice. Yeah. And then so if I had my pre-approval done, I lapsed my 120 days. Do I need to restart the process? Or since you already have the information, can you just kind of say this is the new interest rate based on today and kind of just carry it forward?
Yeah, kind of just carry it forward. So that's what happens. One of my clients, their pre-approval ended. But I was like, you're totally fine. Like, we know that you're pre-approved. And then every month I like to touch in with whoever has the pre-approval with me. If the rates have changed, I like to let them know, okay, so at the rate we submitted, here's what you were pre-approved for. But now that the rates have dropped, here's your little extra of what you could afford now at the same monthly payment. So that's always nice too, because with interest rates change, so does your affordability. So, and sometimes even just like $5,000 is what you need to win a deal, right? So it's good for them to stay informed.
And then does getting the pre-approval affect your credit score?
Yes. So when you have a pre-approval, we have to pull your credit. So as a mortgage broker, we have to send you some upfront compliance when we start to work together. And one of those is a consent form. So that consents us to speak to your realtor as well as to pull your credit. So what happens is when we pull your credit, it'll show up as Premier Mortgage. And then I myself have 2 more abilities to pull your credit without it hitting your credit. So it's 1 hit, but I get 3 tries, which is nice because sometimes it takes 6 months. So you're on that like 3rd try when they're finally putting in the offer and we're going for an approval. But it's a soft hit. It's not a hard hit. But sometimes it can drop you quite a few points. And by quite a few, I mean like less than 10.
Okay, that's not bad at all.
I was like, oh, that was the wrong verbiage.
Like, oh, let's not do this anymore.
In my head, I was like, eyeballs are going up. Yes, quite a few, like 10 or less.
So soft hit.
Soft hit. It's a soft hit. And then we get three for 1. So
if like we do get denied and credit score is a big one, you could give the kind of to-do list and the monthly accountability, and then you could hit it again in like
6 months,
6
however
months,
long.
and it wouldn't affect anything for that.
Nope. It wouldn't show a pull. It would still just be that first original pull. Yeah.
Then what if I get denied for a reason other than my credit score? How do you kind of... No, it's definitely case by case, but just...
It's totally case by case. So if it's for like having too high of debt ratios, then we know, okay, so here's... I can play around with the application and I can be like, if your credit card balance is currently $3,500, if we can get that to 0, then that puts you in the realm of being able to afford what we submitted for pre-approval. Although you have a pre-approval, it's not like a concrete set in stone because it is always dependent on the property. So you could have a pre-approval, but then there could be that the property is what gets you declined.
Yeah. We've had some clients that we have to like highlight, like if they're buying something that was like in renos or something and their kitchen is disabled for the time being and they want to buy, and then they're like, oh, I can go in and like customize the kitchen, but they can't get a mortgage on it because there's no kitchen. Yeah,
it's not livable, right?
Yeah.
It has to be livable.
So what are kind of those, like, I know the kitchen is like your big red flag of like they're gonna deem this that it can't be your residence, so you're not gonna get like a standard mortgage on it.
Sometimes square footage. So camps, like lots of camps are starting to be turned into homes. Those can become a little bit more difficult to finance. Some of them are a hard no. They're just like a nope, we're not financing that. And then some of them you can you have a bit more wiggle room. If there's no running water or power, or if the photos make it look like it's going to fall over at any given moment, that's a hard no for the lender, because important things, lenders look at the MLS listings. So if it's a sold as is, where is, that's going to bring more questions. And sometimes is a case where we just can't get the funding because we know that it's just by looking at it, sold as is, where is, boom, that's a red flag. What's wrong with it? Right. That's not always the case, but in a lender's mind, that's what they're thinking is, oh, well, what's wrong with it? Yeah.
Cause I've tried to like stop that misconception, because sometimes I feel like people like automatically go, what's wrong with it, and wipe it out. And then like us as realtors get to see a whole lot more than what like pops up on realtor.ca. So sometimes it's just like, it's an estate sale. They're just trying to offload it quickly. So they don't want a list of like, if you do an inspection, they'll probably say, go do the inspection. But then they like, where in a general transaction, we might say like, oh, this came back in the inspection. Can we now negotiate the price based on this needing to get done? Sometimes it's just like, they don't want that list. They're not doing it like,
that's it. It's just sold
like
as
where,
it is.
where sometimes they'll say like, oh, like there's a couple trusses that need to be replaced. Can the seller do that at their expense, and we'll keep the price as is? Stuff like that, where they're like, sometimes the as is, where is just like, we're not doing anything. They don't live here. It's like something like that. So sometimes it's not always terrible.
Sense.
Sometimes it is terrible.
Yeah, and sometimes it is, which is why they look through all of the photos.
Yeah.
So if in one of that just, it makes them look more, right? So, no, I know that it doesn't always mean that there's something wrong, but it does always kind of bring up
I just feel like even for like people like looking on just realtor.ca, it already red flags. And I'm like, sometimes it's just like that there's like junkyardy type stuff there that they don't want to clean up, where usually you're getting it like,
it would be
everything
immaculate.
that isn't like the thing they said in our course was like, if you took the house and could turn it upside down and shake it, everything that falls out is.
Oh, that's a cool way to put it.
Yeah. So everything else is like a chattel. So it would come with the house. Like they're not going to disconnect like the bathtub or something silly like that. But anything that would come off if you turn the house upside down and shook it would be gone. Where sometimes it's like, again, like junkyardy, and they're saying like, account for like spending a couple grand on dump truck runs and stuff like that. We're not dealing with it. That's your as is, whereas it's a structurally perfect house, but we don't have the capacity to clean it or something like that.
It's all the extras that they're not going to want to do. Yeah. And then another thing, like an environmental hazard. So how close are you to a yard waste, right? Like, how close are you to a gas station? Because that could be leakage. Right. So sometimes those type of things, we do have to, with every application, make sure that the house doesn't have any type of like environmental hazard attached to it, which can be difficult when you're lots of properties have like a house and then an auto mechanic shop on it. Boom, you are automatically an environmental hazard, right?
Yeah.
So that's kind of just some weird little things to think of. Yeah.
Do you so there is a condition for like an environmental survey, which usually is almost automatically, we don't need to worry about it, except for in situations like that where it's like, oh, this used to be like an auto mechanic or something like that. So if you get that done and it comes back clean, is that then like your green flag as well? Or are you still kind of like, no, it's still a little bit sketchy?
It's still up to the lender. Yeah.
Okay.
Yeah. It's still up to them. They got the hammer.
Yep.
Right. And that's where I'd be like, okay, well, let's try another one. We'll ask for an exception.
Right.
Yeah. But no, that's the choice, right? Is if one lender declines you and we know why, there's always the ability to try another lender too.
Right.
So
do you start to get like, just 'cause I'm sure you've submitted so many, do you start to know like, we're probably going to get declined there because of this, because they always kick that back. Yeah.
And then you also get the case of like, sometimes in multiple offer situations, you are putting in that 5-day condition, right? So then I automatically know I can't take it to these people because they're slower, where I know I can take it to this lender. They have the good rate. It matches the client, and they're going to get back to me in less than 5 days. Yeah. So I'm a firm hard no for car loans. Anyone who talks to me knows those are killer. So like their debts we can't take off because generally you have them for 5 to 7 years, right? So a car loan, if my biggest piece of advice is if you know that you want to go house shopping in the next year, do not buy a new car. Okay. Because with the prices of new cars, you're almost buying a small mortgage, right? So that's So that's a big one. Is if we can figure out room to kind of wiggle things around, then it works. But if it comes down to where you just don't make enough money, then that's a harder conversation, right? Because then it's like, do you have someone who can co-sign with you, or Do you have the ability to maybe switch jobs and get a higher income? So sometimes there's harder conversations than just, hey, let's fix your credit score and pay off a credit card.
Of course.
Yeah.
Especially with the housing market these days, where I'm sure you're running into a good chunk of that where everybody's doing everything right and it's just still not working
And they
out.
still just don't have the funds, right? Yeah. No, it can. And down payment is the biggest one. So there's always, well, if you don't have a lot of debt, then let's switch to the avenue of save, and save some more.
Yeah.
So if that's, sometimes it's, hey, give me 3 months worth of your bank statements and I'm going to highlight and show you how much money you're spending on fast food every month.
Right.
Right?
Yeah.
How much are you hitting at Tim Hortons or a Starbucks every month? Sometimes it's $200, right? And it's just, you don't realize it because you're not actively budgeting. So budgeting is another one. Again, I send out a lovely little budget package and you get to fill it out. And I give you a guideline, but at the end of the day, it's the clients having to be able to commit to those things to be able to get to the next steps.
Yeah. So then say in this situation, you do like a parent can be a co-signer.
Yep.
Do they just kind of get lumped in? So you'll need like their 2 years
You
of everything.
betcha.
It's just like a
The same
third
deal.
party now coming right in. Yeah.
Yeah. So now we're adding one more person and we need all of the same things. And if they have a mortgage themselves and a car loan, all those things still have to go into the debt ratios. So we have to make sure that they work. Okay. And then it's also the conversation of letting that co-signer know that, hey, this is going to affect your personal affordability for the next 5 years if that's what we're signing on for. Of course. So
Informed.
Right? Gotta keep them informed. Because the worst would be if they were like, hey, I didn't know this would be on my credit bureau. And then there's a whole pickle I don't want to touch.
Yeah. Or they need a new car
don't
and they didn't realize.
Right? So, but yeah. And then you also have a lot of parents now who are pulling out equity of their home to be able to gift, right? Which is also lovely. Not every parent can do that. We know that.
Yeah.
But also a fun one that lots of people don't know is if you are purchasing a family residence, so grandparents, anyone's, we can do a gifted down payment from the equity of the home. So if you're buying it lower than what it's listed for, we can do a gifted down payment, which is kind of fun.
Okay.
Yeah. See, well, that's my little tip today.
Speaking of tips, do you have any? So I know you like working with the first-time home buyers for like incentives for that. Do you have any tips that they can maybe start implementing now, even without reaching out? Like,
So step one, pull your credit score for free. You can get it for free. You can use Borrowell or Equifax provides you a free credit score every year, and then it's very detailed. So I like that one. But if you
these
want,
ones don't hit your credit.
they
check
don't.
Your credit.
Yeah, I know, right?
Double check. Informed.
Borrowell does not. I can't speak for any of the other ones. But I know if you bank with quite a few different banks, they also provide you that free
I know
credit score.
Scotiabank, you can just kind of keep it. It just updates monthly and nothing to look at it like it's just on your like little phone app. So
okay, because when you sign up at the bank, you do give them permission to do things like that, to offer you special offers. In case you didn't know that, that's why if you walk into a bank and they're like, "Hey, you've been pre-approved," and you're like, "How do I know that?"
I get that all the like half the time I log in, they're like, "Do you want more overdraft protection? Do you want more of this?" I'm like, "No,
leave me alone. Stop. But the only time it's good to take that is if you're trying to build your credit. So if you had a maxed out credit card and they were like, hey, you have the ability to
increase your
limit. The only time you would say yes is in that scenario, but you're not allowed to use it. It just helps you no longer be at your max, right? So tip number one is check your credit. Next one is if you've noticed that you are missing bills, automate all of your bill payments. The best tip I like to give is every pay, put half of it on each of your bills. So if you put a credit card payment on your credit card twice a month instead of once, it tricks the system. So a credit card only needs 12 payments a year, but when you're doing 24, they're like, whoa, look at you, rock star. Let's bump your score up a little bit more. Yeah, so that's always like my number one tip. Divide your bills in half and then pay them like every 2 weeks, or if you're a weekly paycheck kind of person. And then that way, you're not losing all your money all at once. But then you're also kind of tricking the system, and it's showing that you are making more payments than you need to make.
Okay.
Yeah. I know that's a fun one, right?
Tip.
Yeah. That's another thing. If you've had your credit card for 25 years, or maybe realistically, let's say 5 to 7, that's your longest card. Never close it, because once you
Okay.
close your longest standing credits, it goes off your bureau, right? So it's no longer reporting. So it's
Okay.
no longer an active trade
Right.
line. So I always suggest, if we're going to close some credit cards, it's
Yeah.
never your oldest card.
Okay.
Keep your oldest credit card. So I have mine from when I was like 19. It's
Yep.
crazy. And I'm like, it just sits in my drawer,
Yep.
and one thing goes on it a month to keep it active, but I am never closing that sucker.
Yeah. Okay. That's good. Yeah, because I know as part of my initially being denied journey, they did consolidate my credit cards, and they didn't, again, not super on the informed stuff.
Yeah.
So they did just kind of say, like, the way I understood what they were kind of explaining to me was that anything that was like open in credit could kind of be used against me, even though it was unused. They were kind of saying, like, it would be easy for you to rack up 90,000 in debt, even though you have negative
Yes.
$20 right now.
Even though you have an
They're
890.
like, that's hurting you because you could just go out and throw 90,000 on it. So we want to scale that back so that it's a much more reasonable number to them based on your income at the time.
Yeah,
So.
which makes sense. But instead of closing things, you can always just lower limits.
Right.
Right?
Yeah.
So, but yeah, no, you are correct. When you have that much free debt, they're like,
Yeah.
oh, you can easily just rack that up
Yeah.
in a month.
Yeah,
If
so
you
that,
wanted.
but that's good to know. What, like, if you are consolidating, because again, some people just Brandon try to do it themselves based on Googling and stuff like that. And I've definitely never heard the your first card should stay as an active one. That's
Yeah, because
great.
it has the most history, right?
Yeah.
So if
it makes sense, you just
you have to think,
don't
so
think of it.
I don't know you, and neither does a lender. So our only way to know you is your financial history, right? So when I'm reading through those credit scores, and I'm reading line by line, and my eyes are crossing, it's important to know, like, okay, well, they've had this trade line for X amount of years. Right. They only have one missed payment. It was a very long time ago. I'm sure they can have a story. As long as there's a story to cover it, where you lost jobs, or you went on maternity leave, or something happened, as long as there's a story, we can totally clear the blips without too much going on the radar.
Cool. And have you found you get kind of some frequently asked questions from people reaching out to you for the first time that you want to just hit us up
The
with
credit
now?
score is always a big one, which is why I'm like, here's the tips. I always give them.
Yeah.
Credit score is always a big one. And then I would say, like, how do a mortgage broker differ from just walking in? Like, I've banked at Scotiabank my whole life. That's just what I do, is you go in there. Flexibility. We can offer you a lot of flexibility. So, and that's always one of the questions. So as a mortgage broker, we have the ability to use 32 different lenders. So if there's one who won't take you, generally, we can find the right solution. And then if we have to put you in like a B lending space, again, we're creating that game plan short term to get you to the main goal. Yeah, it's always credit. Or, the big one is, what can I afford? Sorry, I don't know how I missed that one. And affordability comes down to so many variables, right? So that's why we ask for all of those documents up front. And it's why we have to pull your credit, because even though in your head you might not think, I've got that Skidoo loan, but it shouldn't matter. It matters, right? Because if a loan is left out and then I pull your credit and I'm like, ooh, whoopsies. We might have forgot that one. So affordability is very, very personal, and it's why we have to have those deeper conversations.
Then do you usually have a discussion? So say my pre-approval comes back and it's like 340. Do I actually want to spend 340 kind of thing? You have those conversations?
In my initial conversation, I'm always like, so what are your expectations? Because they're always going to be different.
Yeah, and
right?
I feel like everybody's done the
well, here's what
hub or something. I'm like, how much can I afford?
Yes, right. There's always that. Yeah. So it's a lot of open-ended questions I've learned I have to ask, right? And then you also have to remember, some people come from a separation, so we have to take into effect like child support. Do you pay it? Do you owe it? All those kind of things can really change your affordability. Yeah. So it's a lot of open-ended questions, and it's always, what are your expectations? Like, I know your realtor's going to ask you the same thing, but so am I. So like, what are your 5-year plan? Like, what's your goal in 5 years? Are we starting a family? Are we maybe needing to downsize in 5 years? Like, it's not always just the right now, right? Which lots of people are very now focused, where I'm more of a long-term thinker.
Yeah.
So one of the questions is always, what's your plans in the next 5 years? Like, what are you going to do? Because if you can afford this right now, we need to make sure you can afford that for 5 years if we're locking into a fixed. So if you have lots of milestones, like you're going to get married, going to start a family, like those are expensive milestones.
Yes.
And we need to make sure that your budget can handle those things like
Yeah.
maternity leave.
Yeah.
Lots of people don't think of that. And if we've maxed you out, what happens when you need a buffer?
Yeah.
Right? So it's very much like, okay, if your expectation is 350, let's say that's the number, here's what that's going to cost you every month just for your mortgage. And then don't forget, we have property taxes. Those go up every year. So you need to know that, like,
Sometimes a lot.
yes. If the assessment is really low and you bought for really high, you're really going to have different property taxes in a year from now, right? So lots of open-ended questions. Introductory phone calls, or we can do email. Like, I know some people, like you said, they're very introverted and they would rather just email. That's totally okay. But I hit them with a lot of questions. Because if I don't know, then I don't know, right? And then we get halfway through and they're like, oh, but wait. So I'd rather be completely upfront and know everything in the front end so that we can plan accordingly. Yeah.
So I feel like a lot of this is for just like getting started. So now what about like my mortgage renewal is up? What does that process look like for people?
Yeah, so renewals are way different than pre-approvals. So with a renewal, it's all going to depend with, is their goal to sell their home and upsize? If so, yes, let's get in a pre-approval, because then that becomes a conversation with, okay, you want a pre-approval to shop for your second home. What do you think is your comfortable from your down payment? So if you're going to make $150 on your home after real estate fees, taxes, land transfer fees, how much do you want to keep in your pocket? And they're always like, what? And I'm like, well, what if you want a new roof and you don't want to refinance 2 years from now? Like, how much do you want to keep in your pocket? And then how much do you want to put towards your home? And then that would be the rate that I would submit for a pre-approval.
Okay.
Yeah, so that's that one. And then renewals. Renewals are fun because they're all coming up.
People are getting the shell shock right now. They got like under 2, and now you're like,
Now you're looking at like 4. Which is, if I would have to say that for people who are renewing right now, who are going from like a 1.9 atrocious rate, variable is probably a really good conversation to have, because what a lot of people don't know is when you enter a variable mortgage, you have a one-time lock-in availability.
Okay.
Yeah.
That's for like every
For all
bank.
of-
Like,
yeah.
I did not know
So
that.
you have like a one-time
I feel like
lock-in.
a lot of people don't know that. Or
No,
I
they
feel like
don't, because
people would have made some different moves as the rates started going up, and they thought variable was a good idea. That's interesting.
Yeah, see, that's when their mortgage agent should have been reaching out and saying, hey, want to use that one-time lock-in? But we can't go in the past. So for moving forward, what can happen is if, with the current economic climate, if you feel that for your renewal, you want to enter into a variable, it's always prime, which is, I believe as of today, 5.95. And then lenders are usually like minus 0.9 to a whole percent. Kind of, it varies depending on the lender. Each lender has different rates. But that's what I am having conversations with for renewals right now. I just met with new clients on Friday, and was the discussion. Is they're renewing. They know that brokers can offer different rates and different things than their bank, so they wanted to seek outside advice. And we talked about variable, because if we're going to keep going down, you have that ability to lock in. So if the whole world turns upside down again and rates start to go, and they do start to go up, we can lock it in before it does. So then, I know. Did I blow your mind there? I can see you're like,
no,
whoa.
I had no idea, because I'm a very low risk tolerance person, in case you haven't gotten that vibe from me.
Yes.
So that would have, I mean, I was happy to lock in at I think I was one of the like low 1%. So I was fine locking in, but like in a situation like today where it's like, I had no idea that
Where
that
some
was a
people
thing
went
where
from a 2 to a 7.
Yeah. And even just talking to people throughout the chaos who were in really bad situations who I don't think knew they had a one-time lock-in option available, nor did I for
Lots
them.
of them
So
didn't. Yeah, lots of them didn't.
Yeah.
And I didn't learn that till I was in corporate banking, right? So, and I
Yeah.
was in corporate banking during that time where rates were starting to go up. So when I started in corporate banking, prime was I think it was like 1.5.
Yeah.
And then when I left corporate banking in 2023, it was like 5.79. Like, you know, it was that time.
Yeah.
And that's when I learned. I was like, anyone who would come and be like, hey, psst,
Yeah.
I'm going to make you an appointment. You need to like
lock
lock
it.
this in. Yeah. Like before we go way
Yeah.
out the window.
Yeah.
Yeah. Yeah. It was one of those things. I don't think it's totally talked about. Again, finances are taboo, right? Like lots of
Yeah.
people don't want to talk about them. And
Yeah.
lots of people can be really struggling. And I think they need to know that as long as they are willing to seek help, help is there for them.
Yeah.
Yeah. Once you have your pre-approval,
Yeah.
the most important thing I can stress is do not change jobs before talking to your broker. Do not do any types of loans or increasing anything without talking to your broker. Do not buy anything
Pretty much, yeah.
without talking to your broker,
Yeah.
because it can seal the deal, right? So if
Yeah.
you're pre-approved and then all of a sudden you're like, oh, well, I took out a $10,000 personal loan because I didn't think that would affect me. That's where hard conversations
Yeah.
have to happen of like, yeah, that did really affect you. Here's what you can no longer afford.
Right.
Because, so those are big ones.
Even like both of us coming from Ontario, like even paying for like moving companies in advance can be like $6,000 on the credit card. And you're like, oh,
yeah.
what is it?
Not till your house closes.
Wait till the papers are signed. You
Yes.
get the keys, then go ham.
That's
Like,
yes, because then
Yeah.
after that you can do whatever you want.
Yeah.
You still shouldn't take out a ton of debt. Let's just preface that.
Yeah.
Please don't take out a ton of debt. But yeah, because lenders do have the ability up until closing date. If you have made any big changes like that, they can actually revoke the mortgage.
Do you see that pretty often that they're checking in like right before?
Oh, right in
Yeah.
commitments. For some lenders, right in the commitments, it states we have the ability to check your credit up until the day of funding. So like no matter what, that's one of my lines. Once we're having, generally it's a phone conversation, not in person.
Yeah.
And I'm reading line by line of the commitment. Before I hang up, I'm always like, so here's what's super important. Please don't change jobs. Please don't take out a loan. Please don't put anything on your credit cards
Right.
until this house closes and funds,
Yeah.
because they do have the ability to pull your credit up until the very last second.
Scary.
It can
So
be scary, right? It can be scary,
Especially
especially
like how I furnished my house on my credit card. That was bad.
that
That was terrible. Yeah.
please don't tell me that. Yeah, that would be like the most important thing, because all of it, like don't move money around either. Oh my goodness, that is so important. Do not move money around. If you have an account that is specifically designated for your down payment, do not shift money around.
Okay.
We always have to track the money. So any money laundering laws have increased as of the 11th of October. So if you move any money out or if you move any money into that account, we have to track it. So like if you just poof, there's $10,000, that's great, but where did it come from?
Yeah. You have to
And then
follow
we
up.
have to
Yeah.
track all of that, or else we can't use it, right? Yeah, so that's also super important that you don't think about, because I know some people are switch money all the time, right? To get
Yeah.
better interest rates at a specific savings account or something.
Yeah.
But yeah, super important. Do not move any money around.
Yeah. So like when I did one of the first time home buyer incentives where I did the withdrawal out of my RRSPs.
Yep.
That would be okay. I just need to explain it to you, kind of thing.
Yeah. No, well, I would already know, hey, where's your down payment coming
Right.
from? Because that's a conversation,
Yeah.
right? And you would say it's coming from my RRSP. So what I would do is I would say, perfect. I need your most recent RRSP statement.
Yeah.
And then once your funds shift from the RRSP into your bank account, then I need to see like a 10-day statement on your bank account showing that deposit going in. Things like that are totally okay. Yes.
And then how
Yes.
about, as you mentioned, there's a lot of like gifting of
Yes.
money now.
Yes. Yeah.
Does it need to be sitting in your account for X amount of days? Do you need an extra
Gener-
amount? Should it be in the account before people reach out to you?
No,
Give me that
no.
one.
I always say don't get the gift until we know that it's like firm and we're going to move forward. As long as we know that we can get the gift, that's the most important thing. So what happens is once I usually get through all of the conditions, and then the last condition is usually your gifted down payment. So let the client know, all right, now's the time. Let your family member know to deposit those funds. As soon as it hits your bank account, I need a 10-day, like 15-day statement. And then that's when I issue a gift letter. So you never want to issue a gift letter until the funds are in the account. And then some lenders do want it in there for 15 days, where some know it's a gift. It's fine. Once it's in there, it's in there.
Okay.
Yeah. Yeah. And then,
And if you have extra money and want to adopt someone in their 30s.
and then another important thing is it's not just a down payment that you need funds for. You also need your closing costs.
Yes. And sneak up on people.
And they can sneak up a lot depending where you are, right?
Yeah.
So it's not totally my wheelhouse because I'm not in charge of legal fees and all that stuff.
Right.
So I always say on my end, we have to show that you have 1.5%, but in reality, you need closer to like 2 to 3%, depending on the purchase. Because 1% automatically is just the land transfer taxes. Yeah. Yeah. So that's another big one. Yeah. And on some files, like what I'm doing right now, you can have the ability where we can just use your available open credit to pay for your closing costs if your down payment's getting gifted. So if you do have those room in your ratios and you're short $2,000 for your closing costs, proof of, some lenders do give us the ability to say they're going to use $2,000 off of their line of credit. Please just add a 3% repayment fee in, and then as long as your ratios work, that's another option. Yeah.
That's cool.
Right. That's another little mortgage broker thing. Again, we get to play with your application, right? And we know that some lenders will let us do this and some won't. So that's kind of, that's the fun of it.
And the other thing I just want to bring up, because it kind of baffled me that this wasn't a conversation, but I was helping with paperwork on a deal and the deposit became due, and they were already homeowners just looking to upsize. So they were selling their house and buying a new one simultaneously. And on the house they got the accepted offer on, they had their deposit. So we kind of sent over like, here's the amounts, here's who to make it out to, blah, blah, blah. And they're like, what do you mean? You're like, the deposit. They're like, oh, is that different from a down payment? I was like, yep. Yeah, it's going to get entwined with your down payment on closing day, but this is just to hold it so that it's a firm deal and they don't look for a different buyer than you. And they're like, wait, so it's not just equity out of a house? I was like, I had this conversation with you. No, like you need to have this money. It's going to be held in a trust account. And
it's like a promise to pay, right?
Exactly, And here, especially like Ontario, we saw a lot lower amounts, but here kind of like the
5% seems
golden
to be
standard
common.
is the 5% here,
which I'm on the same page as you. I'm like, what happened to the $1,000? Here's my $1,000. I can definitely pull that out of somewhere, right?
Yeah. So now you're looking more like 20-ish for kind of the average housing
You're looking
cost
at your 5%. So if it's your whole down payment, that's what's happening, right? Yeah. Yeah. That is one that I feel like there maybe needs to be a little bit more education on is the down payment and deposit, two different things, but kind of the same. Because if you're putting down 5% as your deposit, it's going to be used as your 5% down payment, right? It just transfers hands on the back end. Again, out of my wheelhouse, but that's the lawyers. The lawyer gets to play with that stuff.
So just knowing on top of your down payment, again, the money gets entangled eventually, but you do need to have it. Like, again, we talked about that 10 business days. Usually the capper on that, like we've met everything else, you're putting a deposit down within 10 business days.
Yeah, deposit's always the last thing. Yes.
Last thing. So that if you don't actually get your pre-approval because you went out and bought a car and this deal is no longer happening, you're not putting the deposit on, but you're also not buying a house.
Or you bought a side-by-side for the house you thought you were going to get. Yeah, that's not a good one.
Yes.
Nope.
But so deposit is different. Needs to be more readily accessible.
Yes.
And quickly accessible.
Imagine if they went to $1,000 down payment deposits here. That would... It'd be an interesting one. Another really important thing I'm going to talk about while we're on here is that prime dictates variable and the bond yields dictate fixed rates. So whenever we have a Bank of Canada drop, it does not affect the fixed rates, which is, I think, is a little bit of a misconception. That's the biggest misconception that I try to field, because then everyone who has a pre-approval is like, oh, so what the rates dropped to?
Bank of Canada just made an announcement.
I know. Oh my gosh, rates went down. Variable went down. Right. So line of credits, home equity lines of credits, and variable mortgages. That is what the Bank of Canada dictates. And then the bond yields, which we actually went up. So like fixed rates went up a couple weeks ago, just a couple points. So it's the bond yields that we need to watch for those fixed rates, which not lots know. So
I didn't know that either.
I know.
I did know that the Bank of Canada announcement didn't automatically like directly affect, but I didn't know. So do the bond yields kind of correlate in any degree with like the Bank of Canada prime stuff? No?
Not much.
Not much? Okay, good to know. Good to know.
Because it's economics, right? So then it comes down to stock market, politics.
Yeah, because we get all these emails from a bunch of brokers that do like Bank of Canada announces. So I automatically assume since they're like flashing it around, but I guess just to draw up interest and look, we're trending in a positive way.
Yeah, it is. Yeah, it's we are trending in a positive way, but it's just a good mental note to remember that it is a variable rate. So that's why.
Very good to know.
Yes. I know. Yeah, but hey, it's if you don't know, you don't know. Exactly. Right? That's what we're here for. All the things you don't know.
We're trying to keep you as informed as we can.
Yes. Yeah. Because I mean, informed is the most important thing because so many people they don't know the process. So if we can inform them of it and guide them through it, we can make it such a better experience. Right?
Yeah.
It's so stressful buying a house. Like property taxes and heat.
Yeah.
Also things that need to be included. So if you start out where you're looking, let's say outside of the city where property taxes average like $2,500. And then you're like, oh, we're going to go to St. John. And now you're looking at like 5,000. Right. That also skews your ratios, right? So
or a nice efficient heat pump versus like oil heating.
Yeah. Or if you start out looking at like 1,200 square feet and then you go to 2,500 plus, we got to add more to your heat for that because that's double. Yeah. It's double. So,
do you usually, so I know we've gotten information when listing, like, can you just give us a summary of your utilities? And then asked for it from like listing agents for when we're helping to buy. Do you generally need something like that, or can you like guesstimate based on size?
We're allowed to guesstimate based on size. Okay. Yeah. So it's always a minimum of 150 and then up from there. Yeah. Nice. So it's always minimum 150 and then up from there. But yeah, I think that's the one thing if we're like just talking to Ontario people right now is that heating your home here is way different because we're a different type of cold. Yes. So when we say you're heating your home with baseboard heaters, what we're telling you is you're looking at a $700 a month hydro bill. Yeah. And that can be a deal breaker for a lot of people because I don't think they know that that's what you're looking at. Yes. We didn't have a heat source. So I had a heat pump guy come out. And he was like, because of the square footage of your home and you're so old, he's like, you're looking at $1,200 a month and $25,000 just for the unit. And I was like, oh, that's more than my mortgage. Right. We're going to pass on that. Yeah. But yeah, heat sources are a big one. Although the government has lots of good grants right now. So if you are buying a home that you want to put some work into, those are always great to look at as well. So another fun thing that can be offered is a purchase plus improvements.
Right. Yeah.
Right. Lots of people ask about that. And it's not what they're hoping. So lots of people are like, oh, cool. So we want an extra 60,000 and we're going to do all this. Unfortunately, that's not how it goes anymore. So what happens is when you want to take advantage of the purchase plus improvements program, when you're looking at a house and you put in your offer, you then have to get quotes for all of the work you want to do.
Okay.
Yeah. So, and then we have to submit those quotes with your application. And then if you are approved, then what happens is the lawyer holds back the extra funds and you have to fund the renovation yourself. And then as it's completed, then they release the funds, right? So not exactly the program.
When did that change? Like fairly recent?
It's been a while. Oh, okay. Yeah, I would say, no, it's been five-ish years because my home journey is a whole story. That would be a whole other podcast, actually. Yeah. But we were looking to do that.
Yeah.
And yeah, that's what we were like, oh, okay. So we got all the quotes, and then it turned out we didn't even go with that property. But I would say it's been a little over 5 years now where it's shifted, where you don't get the funds up front. Which is why that's when people are up from renewal, that's a discussion I have.
Yeah.
Are we looking to refinancing to do some renovations? Right? Because that's how we can get you just the cash instead of having to do the submissions and releasing the funds after.
I had no idea, because like they're very diligent in our course to like make sure that we're not overstepping, because you guys especially are so heavily regulated. So they just kind of let
Super
us know that
regulated.
it's like an option. Like if they're looking for this, you can inquire about mortgage plus improvements. But I definitely wouldn't know enough to say you're not in a financial situation where that is a possibility, because you pay up front and get reimbursed.
Yes.
So,
Yeah. So that's kind of like
yeah.
if you have a line of credit, that's when you would be utilizing it to kind of float the costs. And if you're using a contractor, most of them know that that's the way it goes anyways. So they're obviously you have more leeway.
Yeah.
But if you're in a position where you got all the quotes and then you're doing the work yourself, it is a matter of having to submit all the receipts to make sure, and then it's inspected and all that fun stuff. Yeah. That's just our quick little touch point on that. HELOC is an open line of credit. So that's always something I like to remind people is it is a revolving credit where your mortgage is just, hey, I want to pull 60,000. I want that cash to do with what I want. You've got your lower interest rate. And then your HELOC is a open revolving credit, and it's a variable product. Yeah.
So there would be a different option other than a HELOC if I'm saying, hey, okay.
Yeah. Again, we would have that introductory conversation. I would ask you what your goals are, and then we would kind of see which product would fit you the best for your long-term goals. Because it's revolving, it's like a credit card, right?
Yeah.
So if you're in a, oh shoot, the car broke down, well, we'll just use the HELOC. Or, oh, hey, we need to pay for that. Oh, we'll just use the HELOC. So corporate banking really made me realize the difference between a HELOC and a mortgage and why it can benefit some over the other. But I did see a lot of cases where people were mortgage free, but they still had a HELOC. So yeah, I'm partial to not HELOCs, but they do have their place. They have their place.
Yeah.
My ethical or my moral law to myself was I just want to share the information that isn't taught, right? Like working in corporate banking taught me so much. And I was like, the average Joe doesn't know this. Right. And like, if we did know this, man, wouldn't that be awesome?
If everybody could just make informed decisions all the time.
And if they could know that like there's so many other ways to do one thing.
Yeah.
Right. So that's kind of, I try to share as much as I can on social media, just because that tends to be a platform that lots of people like to use. Right. Yeah. So DMs are always open. Yeah. Emails, phone calls, whichever you prefer. Yeah, I know. Even a text. Yeah. Yeah, you do. I'd say that's the most important is because of being a broker, I have close connections with all of my lenders, right? Like we have events and we talk. And I mean, there's one BDM who I'm calling every week, like, hey, does this client fit your profile? Just want to make sure. And then sometimes you're just throwing really weird stuff at them, hoping my one BDM, he calls it, we're going to throw spaghetti at the wall and see if it sticks. Yeah. Sometimes that's just the way the file goes.
And then what does the acronym BDM stand for?
BDM, so Business Development Manager.
Okay.
Yeah, okay. So that's they're like our direct line to the lender. So they're our lifeline. Okay. Yep. really, they're our lifeline. Yeah, because the better relationship we have with our BDMs, the more we know our products, and the more we can have the better relationships with our clients, knowing where to put them. Yeah. It's nice that some lenders, they don't really have boxes. They have more like hexagons. Yes. So it's just pieces of the pie. Yeah. Yeah, it's cool.
Yeah, but again, it's cool to see Scotiabank for both going in. Wild, I did not fit in the box, and somehow a broker informed me. Yeah, they were like, let's take these two sides off, so your box. So,
right, here we go. Now you fit. Yeah. That's hilarious that. And Scotia would have had the lower rate because we don't generally see that right now, right? They're usually in the higher.
Yeah, this was a while back. This was still in Ontario, but
yeah. Right. So when did you move here?
2022. When I embarked on this journey, I was just really ignorant, and I thought especially compared to like the Ontario craziness of the market. I was like, in my head, I kind of thought, we'll line up a bunch of showings and I'll come over and spend a week just doing showings and leave with an accepted offer. But then I very quickly realized that that was not realistic, because like I
Not in
lost
that
my
time.
first bid doing a cash offer like 60,000 over and stuff, and I was like, oh goodness, like what did I just get
wild.
myself into? So that was very much not a realistic thing to expect. But I found like after hearing that, I was very cautious. But the first showing we did, and we say this in one of our podcasts of my moving journey, but as he stepped in, like I knew that the house had like a smell to it through
Ooh.
the phone. Like I was like, okay, I'm getting enough vibes off this virtual showing that I feel a lot more confident going forward with just a virtual showing.
Okay.
Yeah.
That's interesting.
Yeah.
Yeah. See, I wasn't in that space. I was very much the opposite, where we came 3 times for a week and did the
Right.
whole house hunting and
Yeah.
stuff. So
Yeah.
it's interesting. And I
Yeah.
feel like we're almost flipping back to that now. Almost.
Yeah,
Not quite.
Very much depends on like what price range you're in.
Yes.
The starter home stuff, absolutely not. Is it just as crazy, if not more crazy?
Yeah. Yeah.
But like if you're,
And that's where we should say, like,
yeah,
it is a journey, and it is such an emotional journey. But please know that, like, your house is out there.
Yeah.
Because it does for
Yes.
first-time home buyers. Like, a couple clients, like, we're 6 months in, and they're like, man, like, everything we're putting an offer on or we're not liking. And I'm
Yeah.
like, I know it's so hard, but just hold on a little bit
yeah,
longer.
yes,
Yeah,
yes.
because it is.
And also just having the conversation, like we're really good for like your starter home can just be a starter home. It doesn't have to check every box. Like even this home is no longer my starter home. My condo was, but like I would love a garage and I don't have one here.
Yeah.
That didn't stop me from buying it, because I was like,
No.
even if I just hang on to it for 2 to 5 years
Yeah.
and build up more equity, not improve my credit score, Brandon improve his credit
Yes,
score,
yes,
stuff like
yes.
that. And then we can move in, and eventually we will have our dream home instead of just sitting on the sidelines, not building up that equity. And depending on how good you are with money, just sitting on money that you're trying to save, but then you're like, we have enough money for a vacation, something like that.
Right.
So
Right. That's why,
again, sitting down and doing the goal discussion,
conversations.
but
Yeah.
especially like as a first time home buyer, it's probably not going to check all your boxes. So prioritize your boxes, and we'll get the important ones checked off, and keep your list. And especially like sometimes living in a place you're like, oh, I actually hate the open concept, or
Yeah.
you know what I mean?
There's the
Where you
opposite
thought
too,
yeah,
right?
you thought that you wanted all this, and you're like, oh, I don't like this at all.
No,
Yeah.
it's why I love mini homes. So
Yeah.
my broker partner dubbed me the mini home queen. I do at least one a month.
Okay.
And it's because your first home funds your second home.
Yes.
Right? Like that's just the way it goes. Unfortunately / fortunately, the mini home market is where a lot of first-time home buyers under the $200,000 range kind of have to go now, right? But there's still lots of room to build equity in them, and there's still a great first home. Like it's
Some of them are gorgeous.
I was gonna say, some of them
I
are
was trying to
completely
like,
redone.
I'm trying to convince my parents, because they're going to be looking to downsize in like 3 to 5 years, and I was like, the home show actually had the display one that I was like, this is nicer than my house.
right.
I would love this.
And it's all
you
on
just
one
need
level?
to, and you just kind of need to know, like there are a few things like they do need to get re-leveled every couple of years. Like there's some things you need to like understand about them, but same with owning any home, I guess. There's a lot of
a lot.
learning
Yeah.
how much maintenance it actually needs and stuff like that. But I think it's a wonderful option.
I do too.
Yeah.
It's a great way to get your foot in the door if you have a really small budget.
Yeah.
Yeah. And you just have to tell yourself that it's just the stepping stone to the next step.
Yeah.
It's not your forever home. Right. Like, and even if you only make 20,000 off of it, that's more to put onto the next home.
Yeah.
Plus what you already put on it. Like your equity is.
Yeah.
is
And having the
already
mortgage
positive.
experience just makes upsizing that much easier than
Yeah.
banks are already like, oh, look, they actually did this successfully, where they
Yes.
can't confirm, like, oh, you were paying rent. Like, unfortunately, they're like, we can't care about this, even though you've been paying more in rent than what you just got. So, but
know.
by having the mini home where you're paying a
Whatever,
mortgage
yeah.
and showing you do it successfully, it's just, and more money to invest, more.
Yeah, it helps.
Yeah,
It helps
more
because, like you
experience,
said, some of the price ranges are tough right now.
Yes. Yes, they are. Yep.
Oh,
Yeah.
gosh.
But yeah, so I would agree that the craziness has stopped, but only once you get to like 500, honestly.
Yeah, I would have to agree with you. Like anything under 2 is difficult.
Yeah.
And then there's always like, well, what will my monthly payment be? So like generally in the $200,000 range, you're looking at like 1,500 to the 2,000, depending, right? But that's still like what's rent now for a 2-bedroom apartment? Probably that. Really?
Yeah.
See, I'm gonna age myself again. My first 2-bedroom
Like
apartment was
$300.
$665. Yeah, I'm not that old. It was $665, and the hydro was included.
Oh,
Right?
yep.
Because hydro's a kicker.
I'm
right?
gonna go back in time and
We can't go back in time.
get born a
sadly.
few years early.
No. It's what teaches us all the lessons to get us here, right?
This is true.
Well, thank you for having me. It's been a pleasure.
My pleasure. I'm so happy. I'm so glad I learned so much, honestly.
Right?
Yeah.